Hi everyone, welcome to Thursday. And of course, every Thursday we take a look at a share and do a review on it. However, I'm also doing this to help educate you with what I look for when I'm buying shares. Today we're going to take a look at Stride Property Group. So they are a property sector. Naturally, it's based here on the New Zealand share market. Now, if you're wanting education or if you've got questions around the share market, please reach out. I'm happy to help, happy to do a video on it. Even if you'd like me to take a look at a share that you're perhaps considering, I'm happy to run my eye over it and base my rules on it. So do let me know. In the meantime, just remember that this is just for educational purposes only. I'm not intending to give financial advice at all for that. If you're looking for financial advice, then you definitely need to go and speak to a financial advisor. Right, let's take a look at Stride. So at first glance with Stride, it to me is looking like a share that we definitely want to stay away from. You've got the classic down chart, if you like. On the top left, it's started the 5-year period at $2.63. Today, it's down at $1.15. The only thing to look in here is basically Stride has really been in a trading range from about December 2022 through to now. And you can see that, like on the chart, it's got a grid formation. So where I've got my cursor now, you're looking at around $1.50 to around that sort of $1.15 mark. That's where it's been trading for basically 4 years, which is incredible. The other thing to look at with Stride as well is it is paying regular dividends. They're paying dividends quarterly. Now, for me, I do not want to invest in a share solely for the dividends, purely because a share could fall more than what you are receiving in dividends. So you could still be on a loss. So that's something that I do not do. Now let's zoom in and take a look. Last week, if you like, here's our red candle, and it was quite a solid candle with a very small wick at the top. Basically, the sellers are still commanding this particular share, and I would want to see it starting to have more of an upswing before we would even consider it. And in fact, this is synonymous with a lot of the property sector at the moment and has been for basically a couple of years at least. Let's go and have a look at the 1-year chart and just see. And gosh, at first glance, it brings these candles up to dailies, and there are a lot of red candles in here. And if you watch my videos regularly when we talk about the candles, look at last week. Every candle that you can see since the 24th of September, after that, every candle has had a really long wick on it, which means that there are definitely more sellers out there in the market than buyers, because each time you get the buyers trying to drive the share higher, the sellers take control and it closes lower than where it opens. Then the following day, the same thing. And as you can see, this has happened pretty much every day last week, which is really quite interesting. Let's go and put our moving averages on and just see what they're also telling us. So again, we'll use this 30 exponential. On a daily basis, the market is trading below that 30-day moving average. Again, that's another reason why I wouldn't want to go into this share. Let's also put on the 15-day moving average. And the share is trading below the 15-day moving average as well. And those moving averages are arcing on this daily chart, which could mean that we could be seeing it about to cross through, which what we refer to in a downward trending market, when you have the fast period moving average cross through the slower period moving average, it is what we refer to as a dead cross. Very negative for markets and a very good time to stay out. Let's go and take a look at the 5-year chart, simply because it brings these candles up to weekly candles. If I zoom in here, we've already had that dead cross happen on the weekly chart. It happened around sort of the beginning of February this year, carried on down, and it doesn't look like it's really going to look to start swinging up at any time soon. So again, that is why I would be staying out of Stride Property Group, purely because the moving averages on a weekly basis have crossed. You've got too many red candles on that daily chart. And if you look left to right, the share is in a downtrend. Let's take these moving averages off and let's make a comparison against the main board for the New Zealand Stock Exchange. And look at that. Over the last 5-year period, the New Zealand share market has been up about 7.28%. Nothing stellar, I will admit that. However, Stride Property has been in the complete other direction, and that's been down 54.18%. Definitely another reason why I would want to stay out of Stride Property Group. So not a lot else to report there for you on Stride Property Group. What we're seeing with that property company is really synonymous with what we've been seeing with a lot of property companies here in New Zealand. We all have this love affair for properties here in New Zealand. However, it's certainly not reflected in some of these commercial enterprises that are out there, which is really unfortunate. But these videos are designed to educate you, let you know and learn what I specifically look for when I'm looking to trade shares. So I really hope that they are adding value and are helping you in your trading journey. And like I keep saying as well, I love reading the comments. I love being able to help people. So if there is something that you're unsure about with the share markets or your own trading, just reach out, let me know, and I'm happy to take a look, happy to do a video on any questions you may have, or even look at a share for you and base it on my rules. So I really hope you're getting some value out of these. So until next week, do take care.